Let's get the show started this Friday, the 23rd of July. I am Bosun Amafaye, and this is your Frontier Opening Bell with Luke Ofojebe, who is the head of equity research analysis at Vertival Capital in Lagos. Good morning, Luke.
Good morning, Bosun. Thank you for having me today.
Thank you so much. Welcome to the Opening Bell. If you look at the markets, yesterday, the Nigerian equities had a very big jump to start after a two-day public holiday. Look, you speak to that a little bit further for us. The PRVM continued to go higher, looking for a new composite reading, 166.67 by 40 basis points. The Egyptian market is yet to reopen and will not reopen until Sunday. That's going to be a full week break because of the El Adha Muslim celebration holiday. The Nairobi market finished by about 1/10 in the green, and the GSC came with a very big jump as well, 1.27%. In East Africa, you're looking at the BAT, British American Tobacco, reporting 22% revenue gain for the period under review because of very strong domestic sales. The World Bank has earmarked $490 million for the island of Madagascar to buy the COVID-19 vaccines. You remember, Madagascar was one of the countries sometime early last year that says it's got its own homemade vaccine for the virus, which a few countries on the African continent ordered a bottle, but it never really made the day. So it looks like the real vaccine is coming through from outside Madagascar. Kenya's mobile money transactions are up 56% in the January to May period. And for financial literacy, the KICD in Kenya and the UAP Old Mutual are tying a knot that will get them to spend about 21 million shillings on that. Let's talk about the vaccines a little bit, Luke. From where we are right now, it looks like without these vaccines for the continent, the level of vaccinations is just about 1.5% out of 1.2 billion of us or so.
So it's really, when you look at the vaccination rates in Africa, it's really interesting. And I mean, quite unfortunate anyway when you compare it with what's happening in the western part of the world. Vaccination rates in advanced economies are currently above 40%, but here in Africa it's below 2%. And the reason for this is because of inadequate, financial fiscal policy to actually cover the spend on vaccines, really. I mean, a case in point is Nigeria, where we have a budget deficit of about 5.6 trillion, and that deficit itself, that budget itself, doesn't really cover any expenses for vaccine acquisition in 2021. So you can imagine if the government also needs to include the expense for vaccination in the country, that should take the deficit to as high as 7 trillion on its own, and that was more like the budget for 2015, 2016. So clearly, it's more of inadequate fiscal policy to cover vaccination rates. And another thing to note about these vaccination rates is also the latest news we are getting recently, and that's the fact that this Pfizer, which is considered to be one of the most potent vaccines for COVID-19, is now 13%. It's considered to be 13% effective for the Delta variant. So, I mean, the situation is actually getting worse in advanced countries. Here in developing markets, where even for the normal variants, we still have a vaccination rate of about less than 2%. So that means there is even no discussion on ground on how to even tame the Delta variant. And this is what the government also needs to look into and see how they can quickly, improve vaccination rates in their countries.
A very nerve racking conversation here around this, by the way. I don't want to believe, Luke, that perhaps some of the African sovereigns are hoping that we can sidestep the virus, so they're not really making any effort to spend, hoping that somehow the virus will go away without really making strategic effort at securing enough vaccinations, do enough testing, hoping that, well, the numbers are not so high, at least in certain demographics, aside South Africa, Namibia, East Africa a little bit, then a little bit, of course, in Nigeria. So maybe North Africa as well. So let's just hope that this change as we move along. Let's chat to Nigerian market because it was a very surprising, a very strong uptick yesterday with the big names we saw drove the Nigerian market up. But the central bank is set to issue digital currency, at least the test run should be by the end of September. Hopefully, that will be coming through by October as well. Looking at the same time period that the Ghanaian authorities, the central bank, also looking to float ECD. The face-off between Nigeria and ENI over the OPL 245 is also likely to get a resolution with the arbitration tribunal now set up and good to go. Ghana's debt deficit, Ghana's debt as a ratio of the GDP at 84% by the end of this year, according to warnings from the IMF, is not really looking good. But here is total earnings. Let's start from there, Luke.
Yeah, like you said, Total Nigeria PLC released its Q2 results yesterday. The result was really fantastic. When you look at their growth in top line as well as growth in bottom line. To start with, look at net profit, which improved to 5 billion in the second quarter. That's a remarkable improvement from a loss of 400 million naira in Q2 last year. And this performance was mainly supported by the growth we saw in the lubricants business, which typically offers a much higher gross margin compared to the fuel business. The lubricants business grew by about 115% year on year to 21 billion. That's the highest the company has ever done in that business line on a quarterly basis. So as a result of that, we saw like an improvement in gross margin to 17%, an improvement from 12% last year. Also, operating cash flows improved significantly, mainly supported by the improvement in margins and net profits. Net operating cash inflow came in at about 15 billion. That's an improvement from a net operating cash outflow of 9 billion. The company was also more operationally efficient in Q2, really. When you look at the OPEX margin, which dropped to 9% from 18% last year. So overall, it was a fantastic result, regardless of any metric you choose to analyze it. And that was why the board declared an interim dividend of 4 naira per share, and we expect to see more dividend declarations before the end of the year.
Well, this is Total. I think this is Total stating that is the market leader, by the way. Look, but do you think these earnings from Total will mirror the rest of the oil retailers like Wando, which is listed at Dover as well, MRS?
Yes, we should see a similar trend. But in terms of performance, it's hard to tell right now. But for Dover PLC, we expect lubricants business to also grow significantly, because what really supported Total's lubricants growth was the increase in pricing, and that was common to the industry basically. The average lubricants price increased by about over 40% within the last 2 months. And so it was across the industry. So for Dover PLC, we should see a similar trend as well. But what we should also take note of is the contribution to total revenue. For Total, lubricants contributes about 25%. For Dover, it contributes about 8%. So the contribution is less compared to Total. So we might not see that significant jump in net profits like we've seen in Total Nigeria PLC because of the lower contribution of lubricants to their operations. And the same applies to Wando as well.
Is it likely any of the other oil retailers will pay an interim dividend? Oh, that's asking for too much, by the way. Maybe.
So for Adova, really, it's not really part of the company's policy to pay interim dividend. But if we should see like significant improvement in their performance, they might also take a similar route like Total has done, and also declare an interim dividend. But right now, we don't see that happening. Rather, we think it's by the end of the year that we will see their actual dividend declaration.
Interesting. Let's touch on with the Southern Africa, because the markets there are still counting the cost of the recent wanton looting, arson, destruction, violence. The number of deaths are heading towards 300, at least by some estimates. That's for just a week. That's quite humongous, if you ask me, both in human and financial costs. Well, yesterday, the central bank left interest rates unchanged. GDP estimate was also left unchanged at 4.2% for this year, but next year is being revised slightly downward from 2.4 to 2.3%. Then within the same South Africa, you have the Real Estate Investment Trust. Floated on the GSE, looking at the bottom of the barrel in terms of the impact this is having on them, considering the level of destruction. A number of the big stores reported total burnt down of their facilities. At least 4 belonging to ShopRite were completely burnt to the ground. Here's the whole chicken coming home to roost for South Africa. Give me your take on the latest interest rate decision and what's your outlook for Nigeria moving for next week, Monday, Tuesday. Luke.
So that decision really should not be surprising in South Africa. I mean, that's the trend we've seen across the globe. A number of central bankers are actually keeping their interest rates low and also holding on to these low rates because the intention is really to spoil economic recovery. We saw what happened last year because of the pandemic. We saw like a significant drop in economic growth. You know, some economies declined last year as a result of the pandemic. So this year is considered by many to be the year of recoveries, basically. And to drive these recoveries, you need to keep interest rates low. Governments also need to spend more on infrastructure, also need to spend more on other parts of the economy to actually, support the monetary policy. And that's what's taking place in South Africa. The European Central Bank did the same thing, held interest rates unchanged just recently. So it's just a trend we're seeing across the globe. Then in terms of their GDP growth, I mean, you should expect GDP to grow significantly because last year was a low base. This year is year of recovery. So on that basis, you should expect to see significant growth in their GDP.
Interesting. We'll keep an eye on the earnings period as well because the industry, everyone's coming through with their half-year numbers. So from next week, leading into August, it's going to be a whole lot much bigger. Look at North African markets as a final app for the show this morning. And as always, the markets are closed for most of this week. So keep an eye on what else is coming through. But the Tunisian Dailies Group reporting half-year revenue by 10%. Tunisian airline revenue down 30% in the first half to 183 million dinars. Who's making money as an airline these days, Luke? Anyone you know?
So just like I said earlier on South Africa, I mean this this is the year of recovery basically, and for a number of these airlines, because of the fact that their operations were grounded last year because of the pandemic, so they're actually coming from a very low base. Travels were restricted last year across the number of countries. So right now that economies are now opening up, we are now seeing more movement of labor between countries. We should expect to see a jump in airline operations. And this takes me back to Adova's, back to Total's report. So if you look at their aviation fuels,
Yes.
the sales from that segment rose by more than 100%. It's increased to 11 billion. That's an improvement from 4 billion last year. And so that's also speaks to the fact that last year movements was grounded, travels were grounded as well, and because of this, that created a low base last year, and that was why we saw that significant growth in aviation fuels this year for Total Nigeria
Yeah,
PLC.
for Total, definitely a whole lot of folks were moving up this year for Nigeria locally at least, and I know that flight fares tickets were also increased significantly as well. So I think this is, and then a few local airlines were also trying to acquire more aircraft, by the way. So it looks like that is the way it is right now. But let's see what the numbers look like for tourism, because the world aviation industry, tourism industry is releasing latest numbers that shows that the global tourism industry will be seriously in the water by the end of this year. Going to be well into trillion of dollars. Last year was also bad as well. But let's see how the world copes with the latest Delta variant and how the reopening of some of these bigger economies will trickle down to emerging markets and frontier ones such as Nigeria and the rest of the continent. Thank you so much, Luke Ofojebe, Head of Equity Research at Vertiva Capital Management. Do have a great day and enjoy the rest of your weekend. Thank you, everyone. Bye for now. See you next week.